We're gonna open up for Q&A. So if you guys have questions, go ahead and raise your hand digitally so I can see you. Don't raise it physically. I want me to see you. Gabriel, you go first. Go ahead and unmute.
Hey, Matt, thanks for the presentation. Very excited to see somebody grow their fund over time the right way. So this is cool.
Oh, thanks, Gabriel.
When you first did your smaller fund, did you guys kick off with an anchor investor, an anchor fund, somebody that co-invested with you as like that support function on your very first deal? And maybe they got a little bit of the GP or a different structure than everybody else?
No, I was all these years, I've never taken on a partner in the GP. I do cut certain members of my team in on deals as they execute. There's certain hurdles and benchmarks. And I do believe in cutting key players in. I think it creates a think like an owner mindset. That's part of our mantra here. But to answer your question, Gabriel, back in Fund One, no, we didn't bring on an anchor investor. It was just go out there, dog and pony show, roll up your sleeves, put on presentations, and pick up a $200,000 check here, a $500,000 check there, and then go out there and execute. And then as we executed, some of these folks that came in on a small level, and this has been a reoccurring theme in Fund One, Two, Three, and now in Fund Four, they'll test the waters, say, hey, I'm going to write you a $50,000, $100,000 check. Once they come in and you execute and you're on point on investor reporting, when you're on point in your communications, and it's very clear and they see the messaging and the theme and they see the value creation. We've had folks start off with a $50,000 check, turn around and write a $2.5 million check once they were bought in. So you never know. I never judge an investor by the size of their check. Because you just don't know what's going to happen. We treat everybody equally here. And when you execute, you'd be surprised what will happen. And because it happened to us.
Thanks, Matt.
Thank you.
CB, I saw you had some questions in the chat. Did you want to go unmute and ask any of your questions?
Actually, I want to ask, in California, how many parks that you have, and are you still looking to expand?
So in California, we only have storage. We've owned parks in California, sold. But yeah, with the right opportunity, we're interested. If you have something, preferably larger, we'll take a look.
When you say larger, how many spots are you talking about, pets?
Preferably 125, 150 plus.
Okay. One of my clients is in the middle of purchasing a factory that is going to be able to build mobile home, 9 houses a day.
Wow.
That be something that will interest you?
It wouldn't be a fit for Crystal View, as it's not part of our mandate for our funds per se. Perhaps something personally, I might take a look at that. Can't make any guarantees, but yeah, I'd take a look.
Okay. Yeah, we're in the middle of the process. And then he said he already have a few thousand home pre-order coming in.
Okay.
So it looks like a really big industry.
Nice.
Yeah. Okay. Thank you.
Thank you. Brandon, I see you put some questions in the chat. You want to go unmute and ask the questions? If not, I can read the questions out. Okay, I'll read it out. How do you facilitate self-management in so many different markets? Do you deploy your own people from the home office to fully staff every new deal, hire and train local personnel, acquire local property management companies, and implement your procedures with their people, or all of the above?
I would say all of the above, with the exception of buying local property management companies. We haven't done that. We'd consider it, but it's more or less been a lot of times we'll buy an asset and we'll be an on-site manager already in place. And if they're good and they're decent, they're trainable, we'll retain them. We'll bring them on when we acquire the property. And then we'll indoctrinate them into the Crystal View way of doing things, our brand, our system, our procedures. And then we'll try to keep them on. We do have regional managers all throughout the country. We have a corporate office here in Las Vegas with 50 full-time professionals, and they're constantly going out, visiting assets, reviewing capital expenditure projects when we're buying new homes or if we're painting a facility. So when we're doing larger capital projects, our team is monitoring that process. They're coaching and training the on-site folks. Sometimes the existing manager, when we buy an asset, isn't going to work. We'll have to let them go and hire somebody new from within that market. So we're doing some of that. So it just depends. But over time, our systems and procedures have gotten very dialed in. Our software has gotten very dialed in, where we're able to do that across all different markets. And we're in 32 markets, Tim. So when we bring on a new asset, chances are we own something already pretty close to it. So it can become very synergistic. If we own something right down the street, we could cut back on management costs, on payroll, and that's going to drive value for our investors. So we look at deals in that fashion as well. And the other thing that's very valuable is the data. When you own in one market and you understand demand and you're looking at another deal that's just down the street, you're not going to be hoodwinked by a broker or seller that says, hey, you're going to fill this many units over time, because you already have that data from the asset that you already own in that market. So you could make real-time investment decisions from that data procurement process, and you become more dangerous in that process when you go to scale. And that's what we've been able to do over time.
That's good. Go ahead, unmute.
Hi. Yeah, I have some question. I am in California, and I've been. So my question is, do you just buy like vacant property, or buy land to build, or buy something that already have the incomes?
So for us, we like to de-risk every deal as much as possible. It's not that we're against development, but we are not a ground up developer. I think there's a lot of risk inherent with that process. It's not our core competency. So what we specialize in is we specialize in buying an existing cash flow stream and enhancing it. So we'll buy, think about an asset that's producing, let's say, $100,000 of net operating income, but it's got the potential of generating 200 to 300. We'll be the catalyst that brings out that value. You think about us that way. So you're coming in and you're very quickly creating a lot of value on a deal with pretty minimal capital investment. And that results in pretty significant returns for investors. That's been our MO over the past 15 years.
Because I have some park here with marina on it, but the previous owner filed bankruptcy. So it's still people that have a high demand, but they just not operating right now. But if like you guys as a fund, it's only 2.7 million fund, 2.7 million marina with the RV park in it.
Oh,
And yeah.
I would encourage you to send those deals over to us via email.
Where can I get your email?
So
can you put your
Sure, invest@crystalviewcapital.com.
crystalviewcapital.com.
Yep.
Perfect. Thank you.
Thanks, Hillary.
Okay.
Thanks, Hillary.
That was a very great. Can you hear me?
Yep, we can hear you now.
Okay, that was a very great presentation. Thank you for that. My background is multifamily and medical offices. We have just pivoted towards RV parks, not necessarily mobile home, but RV parks. And we actually raising money for one right now. It's a small park and it's 5 or 6 feet rather. I think a lot of stuff that you talk right now, I took notes of. But I think I wanted to dive more into the 721 exchange.
Yeah.
Thank you for the link where we could look into it even more. But however, is it considered, while you were talking about it, the first thing that came to mind was a master lease. Is it almost like a master lease?
No, think about it. Probably the best way to think about this is Facebook goes and buys Instagram, and instead of giving them $1 billion of cash, they give them $1 billion of Facebook stock in exchange for Instagram. Does that make sense?
That makes perfect sense. I'll definitely take time and go read it.
Yeah, so it's that process. It's that kind of context that we're doing.
Okay. All right. Thank you so much.
Thank you.
To follow up on that, so you can do that with a normal fund. You don't have to be a REIT to do that.
No, we've done it several times. We've got a lot of raving reviews from sellers who have done that concept. And the only complaint that we've gotten from them is, boy, I wish I would have done more. Because inevitably they choose to do a certain amount in cash and a certain amount in stock. And then they come back and they're taxed pretty heavily on the cash allocation from that sale. And they come back to us and say, I wish I would have allocated more towards stock. So it's worked out really well for the sellers involved. It's a win-win transaction. It works out well for our investors, very tax efficient. A lot of sellers have taken advantage of that opportunity.
I see. Very good. Okay, Vanessa, go ahead.
Thank you so much for all of the knowledge you dropped today. And as always, to Mr. Mai, truthfully, I appreciate you putting this on every single week. So I wanted to ask you, first of all, I saw your LinkedIn really quickly because I think what you did, what you're doing, what you have done is absolutely amazing. And I saw one of the first lines on your about section was philanthropist. And that's one of the biggest things in my life personally. I really love philanthropy. So I wanted to ask you very briefly, at least, what that means for you personally, especially considering that you work with your funds and so on. I know some people get more involved in donor advised funds. Some people have their own charity, their own family foundation, or similar things. I would love to hear about that.
Yeah, no, I appreciate that question, Vanessa. Obviously, at the end of the day, if you achieve a level of success, I feel like it's incumbent upon us to give back, right? Somebody has done something to help us at some stage. I think we owe that to somebody else. And I always feel like somebody less fortunate should be the beneficiary of that. And I try to involve my team. I give a lot personally. There's a few foundations. One of them, actually, I put on a podcast. It's called the Value Add Strategy Podcast. And there's one with a gentleman by the name of Brad Heckerman that I would encourage you to watch. And it's about God Forgives Foundation. What he does is he builds orphanages, wells, sewer treatment plants in Latin America and India, all throughout Asia. And they've actually named wells after Crystal View, orphanages after Crystal View. So it's tremendously fulfilling to see that come to fruition. And I've involved a lot of my team as part of that process. So for them in particular, it's very inspiring and very meaningful because it shows that what they do on a daily basis is more than just driving value for investors. Yes, that's a huge part of it. But look at what happens when we execute as a team and as a unit. These people get a roof over their head. They get clean water. They could go to school. That's just tremendously fulfilling for me, my wife, my family, and the Crystal View team. And I want to do more of that as time goes on.
Thank you so much. And thank you so much for all of the impact that you guys are making. I really resonate with something like a quote that says, maybe you can't save the entire world, but if you help one person, you can save the world of one person, right? Really admire everything you guys are doing. It's an inspiration.
Oh, I appreciate that. Thank you. If we could help in any way, let us know.
Thank you, Vanessa. Matt, one last question for you.
Sure.
The name Crystal View Capital. How did you come with that? What inspired you to name your company that way?
Back in 13, 14, you think of a name for your company, and I wanted something that was completely transparent. And I don't know where I saw it. I saw a cube, like a crystal, and I saw a light going through it, and I saw how it would shine all the way through. So for us, it was like a conduit. We wanted to be completely transparent to our investors. And it has significant meaning. That cube with light going through it represents transparency. And that's why we named it Crystal View Capital.
That's amazing. I love that backstory. That's cool. Looks like we have one now. People are raising their hands. You have I know we're going over the hour here. How you doing on time?
I'm good.
Okay,
Keep
great.
coming.
Thank you, Matt. Becky, go ahead, unmute.
Hi, guys. Matt, I apologize. I jumped in the middle of it, but heard that you invested in Texas, but I just wanted to make sure you're looking. I'm capital raising for 4 different acquisitions, 2 multifamily, 1 in Tulsa, Arizona, and 1 in Texas, and 2 overseas, 1 in Hong Kong and Singapore. Those are more boutique hotels that are already established. So which ones do you want to hear about? I'll just pitch one to you, but because I don't want to take up people's time. So I can give you the deal highlights in 30 seconds.
Yeah, so we don't invest in hotels or multifamily. However, I'd love to hear your pitch. Why don't you tell me about the multifamily deal in Tulsa?
You want Tulsa?
Sure.
Okay. I thought you didn't do Tulsa. I thought you said Texas, but okay.
We'll do 32 states. Yeah, we'd love to. Go ahead.
Okay, so I have an 84-unit stabilized multifamily in central Tucson. It's fully renovated asset, so no capex required. Day one cash flows at 95% occupancy. It's a below market unit at 128K per unit. So recent trade in value is like 140 to 181. So the agency financing, it's about 73.5% LTV. And so the benefit, I'm sorry, I didn't even tell you how much I need to raise, 12 million. And so the benefit to the market conditions would be benefit because Central Tucson has obviously high demand. There's a disciplined set of supply, so it's like maybe 2.5% of the pipeline on the submarket, and it's a strong affordability metrics. So it's really, there's a lot of upside in the market, but there's also upside in the operations. The reason why it's kind of in transition is because I'm trying to find somebody that is going to invest one investor. I don't think I want to try to do several, but it's in between like I don't know if it's a big investment, but I prefer to have less than two investors, maybe one. But the return and exit would be like a 5-year hold. Right now, the holding period is 5, so the exit strategy is probably in 3 years, whereas the agency can get a targeted equity return of 50%. So from year 3 to 5, it's going to be a full disposition. I have a really good deal sheet in terms of project overview, ownership, land details, how much we need to syndicate. I already have a developer investment structure, return, exit, and then just the deal highlights I just mentioned to you. But basically, yeah. So you'd be walking into a 84 unit. I didn't even tell you the square foot. Average is like probably 600 square foot on a 2.4 acre. And we
So
just
let
did a
me-
2 million capex, interior and exterior. So 95% occupancy.
Okay. I could help you, perhaps line you up with the capital provider. We at Crystal View, we find all our own deals. We don't really invest. We will JV, but again, we have a mandate towards manufactured housing communities and storage. So we're not
Okay.
actively investing in multifamily. With that
I
being
see.
said, I
Okay.
do have a lot of connections that are passive that are looking to write larger equity checks. So if you want to send it by, I could try to make a connection or two for you.
Sure. I'll do that.
Yeah, invest at
see.
crystalviewcapital.com.
All right. All right, you get it from Becky Taw. All right, so you do manufactured home and self-storage. Is that right? Okay, I live in Texas. There's plenty of manufacturing homes. You buy the whole asset
We buy the whole
and like
park.
buy and hold?
Yep, we buy the whole park. RV and mobile home parks.
Oh, you do RVs too? Okay.
Yep.
I could probably help you on the RVs because that's an interest of mine, but manufactured home, I don't really know much about, so I don't know if I want to dip my toe in there.
Okay.
I'll send it to you. Okay, thanks.
Thanks, Becky. Yep.
Sure.
Let's also drop Ben's contact info for any of you guys who might be interested in coming in as a fund of funds to raise for Crystal View Capital's fund there. Would Ben be the best contact person,
Yes.
Matt?
Ben's great. And to the extent that he needs to loop me in, I'm available too. But Ben would be the first line of contact.
Okay. And it's Ben at crystalviewcapital.com.
Yep.
Okay. Great. Yeah, we'll put that in the chat for everyone as well. Hillary, go ahead.
Hi, I have a what do you call advice or recommendation. If I like to open investment fund, which is I've been want to doing that. What is your best recommendation? What route should I take, and what is the process for me to get into open up the investment fund?
So let me ask you a question, Hillary. When you say you want to open up an investment fund, do you want to be a fund of funds, like a capital allocator into other sponsors like Crystal View, or do you want to be like a sponsor that invests directly into an asset class?
The
Okay.
fund that can do investing on direct, because I'm going to send an email to you and to Ben too, because I just have so many deals looking for sponsor. So
Okay.
was thinking that I am in real estate like you. I'm a real estate license for quite some time, and now get a lot of deal. And also was thinking that maybe it's the best way for me to have investment fund next year.
What asset class do you specialize in or have a core competency in?
Mostly it's value add multi-units.
Okay.
But we do several states like red state, like Arizona, Texas, Las Vegas, California, a little bit in California. I'm in California, Florida. Okay. Yeah. a little bit in Ohio, not too much, but mostly Florida, Arizona, Texas, Las Vegas. Yeah, that's about it. Yeah.
My advice to you would be to build up your track record. If you have some exits on deals with real returns that are audited, whether that be an asset sale or a refinance, just showing how you've delivered to your investors, I think that's going to help you tremendously when you go out and launch this vehicle to show past performance and a track record.
I've been doing this for 6 years. So one of the property was sold. We get ready to get it sold, but it's not ready to in the market yet. So we mostly like purchasing right now. I haven't finished yet, but it will sell.
Yeah, even if you get an appraisal to show out your path to value creation, to show new investors how you've executed, I think that could be very helpful.
Okay. All right. Thank you. Thank you so much.
Best of luck to you. You're
Thank
welcome.
you.
Yeah, that's a really good tip there, Matt. For all of the people who haven't got their deals full cycle yet, yeah, getting an appraisal just for investors to see that you're able to operate and manage well. And yeah, so that's good. Thank you.
Absolutely.
All right. So we're going to go ahead and wrap up our interview. After this, we'll take a group picture, and then Matt, if you're available to join us in the breakout sessions, you're welcome to do that. If not, we understand either way. But yeah, we're going to be putting people into small breakout sessions of about 6-7 people per room to have a more intimate networking after this.
Great. I have a hard stop in about 9 minutes, but I'll be available until then.
Okay, great. All right. So I'm going to go ahead and wrap up the interview part here. Matt, thank you so much for being on our show today. Really appreciate you. You've been a wealth amount of knowledge and information and experience, and congrats to all of your success and your funds navigating through this challenging time that we're having right now. And it seems like you guys like just cruising right through it and about to take off in a huge way. So thank you so much for coming on to share with us today.
It's been my pleasure. You've got a great organization here, Tim, and we're here to contribute and be a resource for folks in any way we can. So we're appreciative of being here today.
Thank you, Matt. All right, everyone, let's everyone go ahead and turn on your cameras. We're going to take a group picture with Matt real quick. I'm going to adjust my screen.
Tim, you do this every time. Like, we don't have time to do hair and makeup. Can you use Photoshop it?
All right, everyone ready? Get your cameras turned on? Yes? Smile. Matt, we flex on this for our group pictures on this
Okay.
show. All right, there we go. Wow. You ready, guys? 3, 2, 1. Yay.